Good morning, everyone. We will get started here in just a couple of minutes if you'd like to find a seat, please.
And a good morning. This is the Ihry Insurance Farmer Meeting from Hillsboro on YourLiveEvent.com. Again, we will be starting shortly. Rich Morrison and Jim Wiesmeyer, the speakers here for the farm meeting for today. If you want to make it in person as well, they're going to have it at Hope at 3:30. But again, we'll hear introductory remarks and then on to the speakers here at the Ihry Insurance Farm Meeting in Hillsboro in just a moment.
Well, good morning, everybody, and thank you for coming to our 2025 Ihry Insurance Grower Meeting. We're very excited to have Rich Morrison joining us live on the screen here. His presentation will start shortly, and then we'll hear from Jim Wiesmeyer. So following the presentations from both Rich and Jim, we'll add a few comments and we'll get you on your way. So there's plenty of breakfast. If you haven't had breakfast, to those of you joining us online, I hope your breakfast is good as well. Rich, I will go ahead and turn it over to you. We're ready when you are, Rich. Let's make sure the audio works.
Okay. Test 1, 2.
Oh, it's coming through my computer screen. Hold on one second. We can see if that works. You want to try that?
Hello, good morning.
No, give us 1 second here.
Okay,
Technology is our friend when it works.
there you go. Do you have the sound bar on the TV?
Yeah, that's what I was trying to connect that to.
No, okay.
What about
I
this
feel
one?
like I'm there.
All right. Okay, Rich, you are, everyone should be able to hear you now.
Okay, good morning. We going?
Yes, we are.
All right. Well, good to be with you all this morning. Thank you. And forward to visiting with you virtually, I guess. We did have a news outlook forum convened in DC 7:30. So we'll get it in just a few minutes. I want to start out looking at what's happening, and at the top of my list continues to be USDA. USDA kind of got all this stuff up and running back in January. Supply demand report USDA is still at the forefront of things here today. So we'll hit on that. Sports, trade, tariffs. Sports have been a far this year. Now, as we head into the weekend, a lot of concern about the bully. And put this graphic together, and Susan's trying to get this chart, but I added the over here to show, which commodity most impacted. Our exports, Mexico, corn is by far the number one. Into Canada, ethanol is a big deal. Into China, of course, soybeans and cotton. On the other end of things, we do bring in a lot of wheat out of Canada. Maybe we don't want to, but it does come into the country. So I'll be kind of curious to see what happens if these tariffs do get implemented on March 4th, I believe. About a month ago, when we announced tariffs on steel and aluminum, immediately the EU came back and they punched back and said, well, we're going to reciprocate with tariffs on the United States. This was a chart that I had found that basically already shows that the EU is putting plenty of tariffs on the United States. When you look at especially meat products, you can see here the green shows, we've got, 60% tariffs on beef, butter close to 70%. So I'm not sure where the EU goes to add additional tariffs versus what they're already doing. So certainly that's going to be a story for the next several months, what happens from the tariff perspective. The managed funds, we'll look at that here in a minute, what their net position is, but boy, they've got a lot of money that's been flowing in and out of the ag markets. And then lastly, South American crops. And, we're well into the Brazilian harvest now. We're probably a month away from getting into the Argentine harvest. So pretty important time of the year still remains. Also, they're planting double crop corn right now in Brazil. So, that season just kicking off. So the weather over the next couple of months is still going to be an issue. So let's start out looking at the corn. And if you go back to January the 12th, when USDA put out its January crop report, big surprise. USDA lowered the overall U.S. corn yield 3.8 bushel per acre, down to 179.3. That was a record still, even though we saw that big drop, and that drop was much greater than anybody anticipated. And you can see which states went down. The red states went lower from back in November. The green states were up a little bit. The final North Dakota state yield at 149. We did see several states with records, the ones with the pound sign. So South Dakota, Iowa, Illinois, Michigan, New York, Arkansas, Louisiana, all did have record state yields this year. And so when you look at the balance sheet from USDA, it's kind of been a perfect storm for us in the corn market. We go back 2 or 3, 4 months ago, we were talking huge corn stocks. And what USDA has done since then is lower production and raise demand. And that's not a combination we typically see. And so, on the production side, we're now down below 14.9 billion bushels. That'll be the final number for the year. But on the demand side, the feed demand continues to be steady. Ethanol continues to be strong. But exports are really the surprise this year at 2.45 billion bushels. That takes us back to where we were 3 years ago, back when China was buying U.S. corn. China's not buying any U.S. corn this year, yet we're still seeing very strong export numbers. And it's most of the normal buyers, Mexico, Japan, South Korea, Colombia, continue to buy up big chunks of U.S. corn. And so ending stocks had been at one point 2.2 billion bushels. Now we're down to 1540. And there's some people in the trade that think, based on the current sales pace, that export number is going to get a little bigger, and that ending stocks could be down to 1.4, maybe even down to 1.3 when it's all said and done. So again, that's been a big shock, a big surprise that we've gotten this year. The average farm price went up to $435 in the last report. The only place this will come into play will be at the FSA office for the PLC and the ARC programs for 24-25 marketing year. The marketing year ends August 31, so we're only halfway through the year, but we'll use that price at the end of the year to determine potential PLC or our payments. But I did mention exports, certainly being the big surprise, and you could see that sales this year, China not expected to buy hardly anything from the United States, but we're right back to where we were 3 years ago. And so this is the big positive. This is a reason why the corn market has had the run that it's had. And part of the reason that all these buyers are coming to the United States, certainly part of it's been price, but part of it has been that we don't have a ton of competition. If you look at the other major exporting countries in the world, Argentina, Brazil, Ukraine, their crops were all down this year to some extent, especially in Ukraine and Argentina, and consequently they don't have the stocks to sell. So people know that if you need corn, you're coming to the United States. And one of the big stories that doesn't get talked about enough is in Brazil, that Brazil is really cranking up ethanol production. Their government is pushing that, similar to what we did years ago. And so you can see that their domestic consumption of corn continues to rise. And so they're producing more corn, but they're using a lot more of it at home. So this is a big positive for the United States that we're taking them at least a little bit out of the export market. So here's a snapshot of what the hedge funds have done in corn over the last several years. And if you go back and look at the the purple and the green lines, shows the big long positions that they had built back in 21 and 22. This was back when China came into the U.S. corn market, and that was very surprising. We hadn't seen China in the market since, I think, 1996, and all of a sudden China blows in, starts buying U.S. corn, and everybody jumped on board. Traders started buying corn, figuring that China's going to be around forever. That wasn't necessarily the case. And if you look at the gold line by 2023, we recognize that Chinese buying wasn't there, and the funds started to liquidate their positions in corn and eventually went to the short side of the market, spent all of the last year on the short side of the market. If you look at the red line, they had a record short position in corn by the middle of July last year. So you had gone from a historically long position down to a record short position in a couple of years, and we know what the market did. Since then, we started to see these funds buy back their short position. And I give these people credit. I think they saw what was happening in corn quicker than what USDA did, because they recognized late summer that countries like Mexico and Japan were already stepping in and buying U.S. corn. And certainly at the end of the summer, and these funds started buying it back and eventually went to the long side. A couple of things happened. We had a big rally in oil late November through December. Crude oil rallied $13 a barrel. That, if you look at the historical trend between corn and crude, pretty tight correlation. And so we saw good buying in corn. You had the January crop report, and as of just a week ago, these hedge funds now were long close to 400,000 contracts of corn again. We've had 5 times in history that they've been this long. These 3 years here, plus 2010 and 11. So the question going forward is, what will the funds do? Will the funds continue to hold this long position, or will they liquidate? And if they decide to liquidate, we'll hit on that here in just a minute. It could cause that anybody holding corn has right now is right here. That if these people decide tomorrow it's time to get out, then certainly it can put some pressure on the market. But that's what we've seen happen over the last 3 or 4 sessions. Here's March corn. It's been a heck of a run. You go back, last spring we made our high. We had a little bit of a drought rally in May. Never did get that summer drought scare that we normally would get. So in June, July, the markets continued to push lower. August, I think the low was pushed even further than it normally would have by the amount of old crop farmer selling that we saw, and pushed us down to a new low. We had taken September corn, I believe, to 360 at that point. And so then the market rebounded a little bit going into harvest. We kind of had a little bit of a void. Nobody had much corn moving. Had a little harvest pressure in October. Even on Thanksgiving, we were kind of 4.25. Then we had our oil record in December, which I think brought some buyers into the corn market. We had this spike higher on the January crop report date. And then we've added about 30 cents or so to the market based on good export demand since then. Hindsight's pretty good right now. Looks like we've kind of made a double top of the chart, so we're just above $5. And here the last few days now, back below the moving average line. Here this morning, we were trading a little bit lower when we updated the chart, and I think we've actually traded below the 50-day moving as we're speaking right now. The market traded a little bit lower since I updated the chart early this morning. So that's a little bit troublesome, and it probably opens the door for this market to continue to weaken. I had read yesterday that I think the guess was that the funds had sold over 100,000 contracts of their length off over the last 3 or 4 sessions. We'll get an updated report tomorrow telling us what their net position is, but you look at the RSI and the stochastics at the bottom of the chart, all pushing lower. But I've also circled the times. I would constitute these as rallies essentially. And if you subscribe to the market report email daily, I put in the hot zone every day, which markets are hot. We've had corn in the hot zone several different times, including much of the last 3 weeks. Here today, though, if we're trading below the 50-day moving average, probably opens the door, potentially to go down to 454 or 448, these long-term moving average lines. So again, it's going to depend on what the funds do. Do the funds continue to liquidate, or do they continue to hold on to their length? The big story this morning, of course, is the Ag Outlook Forum meeting in D.C. They kicked off this morning, pumping out a bunch of data, what their projections are for the year ahead. And this is the balance sheet inside the red box that they put out this morning. They put 94 million acres out as their estimate, with a yield of 181, a crop size of close to 15.6 billion bushels. That would give you a total supply of corn at 17,150. They are projecting that demand will be at or close to a record high this coming year. They've got the feed number up at 5.9 billion, ethanol continuing steady, exports continuing strong, and even with the good demand, seeing stocks pushing up close to 2 billion bushels. I do think the one thing that's different about this year's projected balance sheet, this past year, this demand kind of caught us by surprise. And that growth in demand in December, January, February was a shock, and it caused the funds to jump in and buy a bunch of corn. We're starting out already for 25, 26, forecasting a very strong demand. So I don't see where the surprise would come from if you're going to get the funds to want to continue to want to own corn. And I think that's part of the reason you're seeing a lot of selling here this morning based on that 94 number. The second alternative balance sheet, this is the one I've been looking at for a few weeks now. I thought it was very realistic that we could flip acres from last year back to 2023 when we planted 94.6 million acres. And so I use the yield slightly under USDA. On the demand side, I don't see the feed demand being there because I don't think the cattle numbers are there right now. And livestock in general, so they must be a little more bullish on building the herd up than I am. I do think ethanol demand is going to continue to run strong. I think export demand should be strong because we don't have a ton of competition from Argentina and Ukraine at this point. But I would think there's a reasonable chance we could build stocks well over 2 billion bushels in the year ahead. The third alternative over here would be is if we got really crazy and planted a record number of acres that we did back in 2012. I don't know what the odds of that are. I did read somebody the other day suggest 98 million acres was possible, so who knows, but you can see potentially what would happen if that were the case. So I really do think we're probably in this 94 to 95 million acres territory. I think that's what the market is trying to digest here. So the reason we're there, if you look at the corn-bean ratio, 2.2, just a little over 2.2 to 1, beans versus corn, tightest we've been in a long, long time. And so the numbers would all suggest this. If you look at the crop insurance prices right now, we're 2 days left to set those averages. Corn is a nickel above last year, beans are $1 below. And that tells you a lot about what you need to know too, I think, for acres. So I do think the upper Midwest is probably going to be where the biggest increase in corn acres is at, especially Minnesota, maybe in the Dakotas, but areas where we had a lot of acres get switched to beans last year because of wet weather. I do think even through the I-states, I'm still talking to people that are telling me that they're going to maybe flip 1 or 2 or 3 farms to corn this coming year. And so that's pretty consistent across the Midwest. I've talked to guys in Kentucky that are going heavy corn. People just like planting corn, and you like the ideas of, that yields could be strong. When we have good yields, you can make money there. So I think that that's likely to happen. So here's where we're at on D's 25. The cow's out of the barn, so to speak. Now, if you look at the RSI and stochastics, we had this market in the hot zone for about 3 weeks, and now we're not there anymore. Insurance price at 471 this morning is probably going to come down another penny or so when it's all final. Still, I think that that's going to be a tremendous tool this year. We'll talk about East in a few minutes, but I do think the ECO is going to work as a nice put option, utilizing whatever that base price gets set at. I've suggested back when we were at these lows in December that if we get back to 450 to 460, basically these highs back in November and October, I thought those would be good areas to get started with some sales and then maybe ratchet up a dime at a time. And so I still don't think we're in a bad spot here today, although we're probably pushing down around 460 as we speak here this morning. But I would want to get something sold just because I do think those acres probably are going to be real this year. And if you look at the history of December corn price, here we are late February, and from now till about the beginning of June has basically been our best window to sell corn. If you wait till after about June the 10th, 15th, you don't see very good opportunities to be locking in corn price. So your best alternative at that point then is going to be using bin space and hoping the market rallies after the first of the year. So I want to sell the rallies now as we get them. Maybe we're coming off of one at the moment. Don't know what's going to cause the next one. We will have a planting intentions report at the end of March. Those will actually be acres based on true producer surveys. So we'll see what they tell us at that time. But, if we're still talking 94 to 95 million acres of corn, we're going to have a weather scare, I think, to get the corn market to rally. So this is what I put in my market report a couple of different times over the last couple of weeks, that in addition to hedging, I think there's some other alternatives you can look at this year that are option-based. And number one would be utilizing minimum price. This was from last week. We still had corn at 476, but selling corn, buying an out-of-the-money option. At that point, you could have bought a 550 out-of-the-money call, give yourself a floor at 460, unlimited upside if the market rallies. Buy puts. I'm not a big buyer of puts because the cost of the put is so great. Therefore, your floor is not that great either. You could buy a put, sell a call, which then cheapens that net cost up a little bit. I like that type of a strategy. The three-way option trade strategy I like as well. Basically buying a put, selling a call, and then selling a put below the market. So give yourself a downside pricing window. Give yourself a limit to the upside. I'm okay with all of that this year. If you buy revenue insurance, that's going to protect you if the market goes way lower. So I'm willing to sell off part of my put protection down at the bottom, say 420, because I know I've got my revenue insurance that's going to protect me if the market keeps going lower. Number 5 on here is ECO, or your revenue insurance in general. And the nice thing about the ECO policy, it's going to use whatever this base price is. I look at ECO at this time of the year like a put option. And if we're starting at 471, then if we assume that we're going to have an average crop in our county, I don't know any other way to look at it at this time of the year, and essentially a 5% drop in price would start to trigger a payment, which essentially is 447. So that's the way I look at ECO as my strike price right now. And the nice thing about ECO, the government's picking up a bigger chunk of the cost of that policy this year. I just think it's a tremendous tool to be able to look at. With the markets trading lower today, it's looking a lot better. So we'll talk about it in a little more detail here in a few minutes. On soybeans, very similar to corn, USDA lowered its final production number back in January down to 50.7 bushel per acre. That was a bushel down from back in November. Big surprise to the market. You can see all the red and the pink states were the ones that went down. The final North Dakota state yield at 37.5 bushel. We only had 2 record states, and those were Arkansas and Mississippi. So I think generally speaking, bean production, bean numbers were disappointing to most folks. When you look at the balance sheet, USDA told us, we've got total supply of beans at 4.7 billion bushels. The good and the bad on the demand side, the good is this crush number. 2.41 billion bushels is going to be a record this year. And you can see here, each month we're setting new records right now. Even going back into last year, the light blue, we were setting monthly records in many of these months. So we've had several new plants coming online, including 2 in North Dakota. So we're continuing to crank out more beans. We've got more plants expected to continue to come online over the next couple years. The bearish part of this was the export number. At 1825, even though that's up from this past year, that's still down more than 300 million bushels from where we were 3 years back. And that's because Brazil continues to take a bigger chunk of this Chinese market. And so while overall demand is pretty strong, ending stocks did fall back in January, but we're still at 380 million bushels. And that's the highest we've been in 3 years. So maybe the bean balance sheet is just less bearish than it had been. Average farm price at 10.10, that was actually down a dime back in the February report. But again, go back and look at export commitments on beans. The sales numbers this morning, just pretty ho-hum. But we are a little bit above last year, but we're below the 5-year average right now. And so that continues to be where we're struggling. And the big story really is China. And if you think back 10 years ago, China was this big growth market, and they were growing more pigs and they needed more beans, more meal. That's not the case anymore. And part of that is because China's holding a lot of beans right now. But I've read an article the other day in Reuters that a gentleman over in China saying that, their pig numbers are just not increasing at this point. So that's the issue that we, Brazil, everybody's got. And if you look at production from the big 3 here, the United States, Argentina, and Brazil, we're going to have the 3rd straight record production year between these 3 countries. And Brazil at 169 million tons, that number may get a little bit bigger. We'll see. The Argentine crop at 49 million here in the middle, that number may get a little smaller. But regardless, we're looking at a big crop at the world level. One thing I think is interesting, if this year, Brazil's going to outproduce the United States by 50 million tons. Look back at 2018, we outproduced Brazil. So pretty incredible, how that has flipped over the last, 7-8 years, and how they continue to expand their acreage and production. Now, some good and bad, I don't know what to make of this. The person that shared this map was trying to be bullish, I think. It is expected to be dry in Brazil over the next 7 days, next 30 days. I think that's actually positive because they're trying to harvest beans right now. It's been fairly wet getting started. So I think this is going to allow the rest of the country to get beans harvested and get the second crop corn planted. So we'll see. You get down into Argentina, a little bit wetter over the next month. And so I think that'll help the finish of the crops in that part of the world as well. So I don't see this as a threat, although I think as you get out into later, the end of March, April, if it continues to be dry, could have a threat to some of the double crop corn up here in central and eastern Brazil. So the bottom line is, if you look at world bean stocks, we're expected to have a record carryout this year, easily a record carryout. And so how do you get rid of those beans? Without China's growth market, it just doesn't appear that we've got anything real friendly here. And if you look at the values of soybeans today, if you're a U.S. bean shipper, it's pretty tough to get in the market because this is the value of beans going to China right now. The U.S. beans in pink, Brazilian prices in green. Brazilian beans are a lot cheaper than U.S. beans. Even after the market has come down some over the last couple of weeks, you're still seeing here March, April, U.S. beans, 70, 80, 90 cents higher than Brazilian beans. So I think this could continue on out into September, even October, because if Brazil is going to ship 170 million tons of beans, it's going to take them a while to do so. And without the Chinese market really screaming for them at the moment, I would tend to think that, we're going to have a lot of stiff competition out into the harvest window here in the United States. So I've been telling folks, and maybe not in North Dakota because you've got crushing facilities, but if you're tributary to the river, I would tend to think basis levels are going to be pretty tough in that part of the world. So something to keep in mind. So looking at what the funds have done in beans, well, very similar to corn. If you go back to 21 and 22, even into the beginning of 23, these funds were holding some big long positions in the oilseed and in soybean markets. But since, you get out into the spring of 23, they were net sellers. Last January was when they really flipped and went to the short side of the market, traded all last year short. By August, they were holding a record short in soybeans as well. Two big things happened, really three things that happened to get them to buy back their short position. Number one, in September, October, was when we had a huge rally in palm oil. Malaysian palm production really fell apart. You started seeing some Southeast Asian buyers come to the United States to buy edible bean oil to take its place. And so funds had been short bean oil, short beans. They jumped in and bought a bunch of it back. Then you had your harvest window. Then we got hot and dry in Argentina late in the middle of the growing season. That caused the funds to buy back. We had the January crop report, which was a big surprise, pushed the funds to a long position of a little more than 50,000 contracts. But you can already see what's happened over the last couple of weeks. Funds have liquidated. And in fact, when we get the report tomorrow, wouldn't be shocked to see that they're at zero, maybe even slightly short the bean market. But it's really tracked with what the market has done. If you look at March soybeans, you can make the argument we're still in a bear market here. If you look at the 200-day moving average, this blue line, we've tried to test it a couple of different times over the last year and really haven't been able to go anywhere here. And, the world stock numbers really back up that we're in a bear market still. So I've been wanting to sell the rallies in beans. You go back to the middle of December, things were looking pretty bleak. A lot of people talking, putting an 8 in front of the bean price at that point. I'm still not going to say that can't happen, but we took the top off the Argentine crop. I think that got things started. Then we had the USDA rally here in early January, and you had the rally in corn, and I think that pulled beans back up to this 200-day moving average. And then since then, we've kind of fallen into a sideways pattern. So we're holding on right now, the 100, the 50-day moving averages, 10, 18, 10 and a quarter this morning. If you look at the indicators at the bottom of the chart, the RSI at 47, stochastics though down at 19, tells me this market's maybe already trying to search out a bottom. So it'll be key to see if we hold this 100-day moving average as we head into the weekend. But I've told folks since back in November, December, I don't want to hold a bean past January 31st, mainly because of competing with Brazil. Brazilian beans are so much cheaper than ours right now in the world market. Now, maybe your situation is going to be a little different, being tributary to some crushing facilities, but if I were, anywhere close to the river, I anticipate that basis levels and futures prices or cash prices are going to continue to struggle. So I would look at a strategy of getting rid of my beans, maybe owning them on paper, maybe owning them in a call option if you want to stay in the market. Now, looking ahead to the Ag Outlook Forum numbers, they came out at 84 million bean acres this morning, which was a little bit lower than expected, I guess. Production at 4.37 billion bushels. They're forecasting another record crush number next year. They're still forecasting a decent export number for next year. We'll see. But even with the strong export number, they think stocks around 320 million bushels. average farm price at 10 bucks. The second one, this is what I'm using right now. I think acres will slip a little further. I'm still thinking we're going to go back to last year at 83.6 million acres. If you have a decent yield, production could still get close to 4.3 million bushels. I do agree that the crush number is going to be strong. I'm not as optimistic on export demand though next year, because I do think that Brazil's going to be shipping beans into the U.S. marketing year, which starts September 1. So I'm not as optimistic as USDA on the export side of things. Even with a few less acres, I think that ending stocks could be, somewhere about unchanged. And so at that point, I really think it boils down to South America. How many acres do they plant this fall? Do they expand more pasture land into soybean production? I think that's going to be key for the bean market going forward. And also watch China. Do their pig numbers start to increase again? What happens there? But I really think it boils down to South America. What kind of a start do they get off to the crop this fall? So here's November beans. You look back to December when we had bottomed out down around 961. Again, a lot of people were talking, putting an 8 in front of this market. So I think this has been a gift of a rally. Certainly the Argentine weather had an impact. Certainly the USDA report had an impact, and we rallied over $1. But again, the 200-day moving average wouldn't let us go higher. This crop insurance price is exactly $1 below where it was last year. So I mean, it's not screaming that we need more beans, but it's also telling me, even looking at the chart right now, that we're not far from that level, and I think it's not a bad place to be locking some in. I just would not want to go into spring without a bean hedge for this coming year. So, and maybe today's report kind of helped to keep the market steady to give us that opportunity. RSI's at 50, stochastics, a little bit over. I also like the ECO program on beans. 95% at 1056 probably gives you, it gives you a decent floor, a little bit under 10 bucks if you have an average yield in the county. And you look at the historical trend of November soybeans. Here we are at the end of February, and you can make the argument from now over the next 60 days, this has been the best window to market beans over the last 3, 5, and 10 years. So it's a little different pattern than what we see in corn, mostly because of the impact that South America has on us now. So I think it's a good opportunity to take advantage of the bumps when we get them. Finally, in wheat, these were the numbers from the forum this morning. First of all, if you look back at this past year's balance sheet, the USDA says we're going to carry about 800 million bushels into next year. So we're, the highest we've been in about 4 or 5 years. Looking ahead, the government told us we were going to plant 47 million acres of wheat this year. Kind of a bearish reaction to that report this morning. And even with, a drop in the yield, still looking at decent production. Still looking at ending stocks somewhere up over 800 million bushels in the year ahead. 550 market year average price. So nothing here to get too excited about. Pretty similar to this past year's balance sheet overall. So it really boils down to the world numbers. We have gotten some positive reaction to the drop in the Russian crop this year. The market did rally for a while on that. You can see that Russian exports expected to drop fairly substantially in a year-to-year basis. It has brought a little demand to the United States. You can see exports at 850 million. We're up quite a bit versus a year ago, but we needed to be, just to keep ending stocks from getting over 800 million this year. So we're the kind of the last country of purchase for most places, because we're on the other side of the globe for most of these markets. So they don't come to the United States unless they absolutely have to. So we'll watch the world situation. Supply demand numbers at the world level, you can see on the left-hand side, USDA did lower world trade in the last report. Ending stocks to usage, if you look at the major exporting countries, they are going to be down this year. We're going to be the lowest we've been in over 10 years. So it's not like we're swimming in extra wheat, but we have enough at the present time. And the market just hasn't had a reason to get excited, I guess, for very long. You can see what the funds have done. You know, we did get on the long side of the market back in 21 and 22, but over the last year or so, they've spent most of their time on the short side. This is spring wheat futures. As of last week, they're short a little less than 10,000 contracts after they bought a chunk of that back here in the last month. And you can see they're buying what they did, you know, here in January, February, gave us about a 60-cent rally in wheat futures. And now they've turned sellers once again and pushed back below $6 here this morning. So we did have spring wheat in the hot zone about a week or so ago. Since then, things have turned down, and now we pushed below the 50-day moving average here this morning. So I would anticipate this market's probably got a little more downside ahead of it, technically, and consequently, probably not a good time to be a seller. That was probably a week ago, of course, but market getting a little oversold here at the moment. Looking ahead to new crop, you know, pretty similar looking chart. The RSI at 43, stochastics moving down even into the teens, so this thing's getting a little bit overdone. We'll see if we can hold the 100 and the 50-day moving average as support. Not doing much here to persuade anybody to plant extra spring wheat this year. Certainly now that we're down 40 cents off the high. So I would anticipate, you know, whatever USDA was using for spring wheat acres, I would probably think that we're maybe going to fudge a few less than that when it's all said and done. So strategizing for this year, you know, we've talked about the grain marketing piece of the puzzle. Also, we have the government program, we have the crop insurance side. When we look at those two pieces of the puzzle, on the insurance side, we're predominantly going to be looking at revenue protection, supplemental coverage option, and enhanced coverage option over the next 2 weeks. At the farm program side, the government extended the 2018 Farm Bill once again, so once again we get to choose between the PLC and the ARC programs. And so if you forget what those programs were, RP is revenue protection, and that's going to protect you on your APH on your farm up as high as 85%. SCO is county coverage that stacks above RP, starts at 86%, and covers down to where your RP level kicks in. ECO goes the other way. It extends from 86% up to 90 or 95%. And I'm calling that the blue light special this year. For any of you old Kmart shoppers, ECO, one thing the government did do this year was come in and change the copay. I like the term copay. They raised the copay from 44 to 65% on ECO. So for corn, that would equate to about $10 an acre cheaper at the 95% level. On soybeans, it's about $6 cheaper than last year at the 95% level. I think for producers that are looking at trying to cover cost of production this year with crop insurance, this is going to be a heck of a tool to be able to look at. Then at the FSA office, we have to choose between PLC and ARC. PLC is just price protection only. You can do anything you want with crop insurance if you sign up for PLC. The ARC County program is a county coverage that starts at 86%. It's a 10% maximum band, but you cannot do SCO if you sign up for county ARC. So to me, the first thing you need to decide is which program do I prefer at FSA. If I decide to sign up for the ARC County program, then that eliminates SCO as a choice for the year. One thing to note, ECO, you can do that no matter what program you sign up for because it does not conflict with the ARC County program. It's above 86%. So to me, this is kind of like how you build your ladder this year. You know, how many rungs do I want? How high do I want my top rung to be on the ladder? What do I want to use to make my rungs? My first decision down at the bottom is how high do I want my individual coverage? What makes the most sense for me on my farm to be able to protect my operation? This middle part here, the ARC or the SCO. You can buy SCO or sign up for ARC County for free. Both of these start at 86%. Depending on what level of individual coverage, that'll determine what your SCO band would be. But this is that middle part. The next part of this then, this upper rung, how high do I want that top rung of the ladder to be to the roof line? How big do I want that top step to be? And I think this year, of all years, looking at ECO probably makes a lot of sense for most producers. And so when we're thinking about all these decisions, to me, it kind of boils down to the market prices. And so if you're looking at the PLC versus the ARC program, PLC is going to use the numbers in the blue box here. So we're starting out this year, these are all going to come up a little bit for most markets because there's an escalator clause in here. When the ARC County price comes up, PLC gets to track with it. So the corn price is going to go to 426, beans are going to go up to 966, wheat's going to jump to 556. You can see some of the other ones, barley's going to stay the same, some of the other markets going to stay the same as well. The ARC price is going to use the numbers in red. And so ARC is going to jump this year because it's a 5-year Olympic average price. And so we're dropping off the 2018 price and we're pulling in 2023, which was a higher market. So that price is going to, this average is going to come up. Corn's going to jump to 503. Beans are going to jump to 1217. Wheat's going to jump to 672. And so if you compare these to the PLC prices, you've got a big advantage in the ARC County program. Keep in mind, ARC is a revenue-based program. PLC is just price loss. ARC takes these numbers times your county's 5-year Olympic average yield times 86% to come up with the revenue trigger for the county. If you were just ultra bearish and thought the market was going to go way lower, you'd probably sign up for the PLC program. Otherwise, ARC looks like the better program. And if you compare ARC to SCO, both being 86%, SCO is going to use the numbers in green. We're not quite there yet. We got 2 days left. But as of today, you can see ARC has a 32-cent advantage versus what we would use for crop insurance. Beans were what, $1.60 advantage right now. So wheat, a little bit of an advantage for ARC County. So I lean heavily towards the ARC County program. The one thing to always keep in mind, though, is that ARC and PLC base their payments on 85% of your base acres. It's not what you plant. It's on base acres. So you're going to want to sit down and see how your bases compare to what you intend to plant. Do you have farms without base acres? If that's the case, then you might want to look at SCO on those particular farms. This is a crop by crop, farm by farm decision. So I could have 10 farms, I could have 7 of them in ARC County, the ones that have a corn base, the other 3, maybe I want to look at the SCO program if I want that middle band of protection. So that's the way you want to go about it this year. I'll tell you this, if you go back 2 years ago, it didn't really matter because ARC and PLC prices were so low, you could have just flipped a coin and it wasn't going to make a difference. We utilized the crop insurance program pretty heavily for all the rungs on the ladder those years. This year, all of a sudden with this ARC price coming up, while the insurance prices generally are coming down, it makes the ARC program more important, and PLC as well. And so we put together this sheet to be able to kind of compare apples to oranges, so to speak. And if you wanted to look at SCO on the left versus ARC County on the right, if I decide to do SCO, I would also have to enroll in PLC because I cannot enroll in ARC County if I buy SCO. So here's an example on corn, and I just used a generic county, no particular county, but I said my APH is 180 bushels. I get to use the higher of the two prices between the base and the harvest price times my APH to come up with the expected value of the crop. I'm looking at an example here where the county yield stays the same, but the price goes down. And so I used 1,000 planted acres and I used 1,000 base acres. I guarantee none of us quite fit like that, but for this argument, we're going to do that. And I'm going to say that I buy a 75% RP policy. So if I decide to add SCO coverage, that would be 11 percentage points times the value of my crop. That band of coverage, that SCO band from 86 to 75 would be worth $93 an acre. If the yield doesn't change in the county, but the price goes down 51 cents, we would end up having revenue of 89.2% of expected, which is not below 86%. So SCO would not pay me anything in that event. However, the PLC would. If we go to 420 as an average for the year as well, then we'd be 6 cents below the reference price. We would get paid 6 cents times my payment yield at FSA times 85% of my base acres. So net, I would pay the premium for the SCO, I would get, it looks like roughly a $9,000 PLC payment. So basically it's a zero sum at the end of the year. On the right-hand side, Ark County, because we're starting at 503, and if the price ends up at 420 for the marketing year, it's going to use the price for the entire marketing year. Then, and if the yield doesn't change, we're going to get a $22 Ark payment times 85% of my base acres, comes out to about $18,000. So given a normal type of a year, Ark County is probably going to be your best bet. Where Ark County doesn't perform as well is if you have a drought year, let's say, and the price goes to $6 and the county yield ends up down. Ark may not get a payment because the yield and the price offset each other. SCO does include the harvest price option. And so if that's the case, if you had that type of a situation, then we would recalculate your expected crop value using $6 up here instead of $4.20. And so therefore SCO could trigger a payment. So if you think we're going to have an extreme situation, then maybe SCO makes more sense. If you think it's going to be somewhere middle of the road, then Ark County for free probably makes the most sense. Same with soybeans, and even more so because of the 12.17 price compared to the beginning price right now. If I look at a similar situation, you know, our SCO PLC might break even, but Ark County in this case, if beans went to $9.50 in the fall and $9.50 for the year, you know, you're looking at $36,000. So if you're thinking lower price, you know, this 12.17 is a big advantage compared to where the crop insurance price is right now. So generally I favor Ark County, but again, you have to have base acres to be able to make that work. So if we look, kind of summarize it all, if you look at our producer profitability matrix, this kind of puts it all together. And so over here on the top left is where we're going to look at crop insurance for the year. Then on the right hand side, I've got a space for my expenses and insurance as well, forward selling, and I could put in a payment if I want for PLC or ARC, or I can use the SCO band because it's basically very similar with an 86% trigger. So let's just start out looking at a 75% RP policy. If I take out the premium, I'm looking at a 180 APH farm using $800 an acre in expenses. I guarantee you're all different than those numbers. So you're welcome to utilize this tool, put your numbers in, and take a look at how it would turn out. But down in the matrix then, you've got yields across the top. We've got harvest prices down the left-hand side. And you can see at 75%, you know, if we have good crops and good prices, of course we can make money. If we have bad crops and or low prices, 75% basically put us a floor at negative $182. Wasn't enough to cover my expenses. 2 years ago, when we had $654 as a base price, 75 or 80% was probably going to be enough coverage to guarantee a profit. This year, that's likely not going to be the case. And so the next step I take here is A, signing up for the county ARC program, and then B, utilize an ECO. And if I buy ECO at 95%, that band from 95 to 86, maybe it's not going to be enough to cover my total cost of production, but it makes the thing look a whole lot better. Then the third step is if you think the downside on price is the biggest issue, then we need to be doing some forward marketing. And so if I were to sell half of my APH at 475, let's stay with futures here, you know, then you look at your matrix at the bottom and you don't have a whole lot of pink left on this thing. So I do think this is one of those years where all three pieces of the puzzle need to be utilized. We need to look at the crop insurance part of that, build a base under it, utilize the policies we've got, utilize that added discount that the government's going to pick up on ECO, sign up for the right program that's going to fit you at FSA, and then do some marketing when the market gives you a chance. And I think we can generate a decent year. And I know a lot of the universities and such have been talking about it being a bad year. I think we've got some opportunities that are going to be a little bit better than maybe what we had anticipated. So how do you build your ladder this year? How many rungs do you have? How do you want that top rung to be? You know, that's what we're doing right now and over the next 2 weeks. So just as a wrap up, I want you to remember we've got several marketing things that we put together. I do the opening phone call at 8:40. Most of you probably get that. We do the email letter at night, the market report. That's where I put those strategies in a couple of weeks ago. If you're not getting that, let us know. We can get you signed up. I do an aftermath webinar the day after every monthly crop report. I do thinking cap videos as well. And if you go out to our YouTube channel, here's a snapshot of that page. I just did one the other day on using ECO as a put option. So go in, type in NAU country. You can go view all of those. You can go back and view the aftermath from back in February on the 12th. So all these videos are out here for you to check out. So a lot of different ways to get information out to help you guys make some of your decisions. So with that, I thank you for the opportunity to visit with you this morning. If you've got any questions, Bethany, if you want to shout them out, or if anybody wants to shout them, we'd be happy to try to entertain those.
Does anybody in the room have any questions for Rich? You must have answered them all, Rich, because it's pretty quiet in here.
Either that or everybody's thirsty or has to use the bathroom. So.
Awesome. Well, thank you so much, Rich, for joining us this morning. And if we do get any questions, we will go ahead and send them your direction.
Feel free to do so. Yep.
Awesome.
Thank you much. You guys take care.
Thank you. Have a good day.
You too.
We will go ahead and take just a couple of minutes here while Jim gets set up. And Teresa has some door prize slips over in the corner. If you want to register for some door prizes, use the restrooms or refill your coffee or water, whatever.
Yeah. And welcome back to the 2025 Ihry Insurance Hillsboro Farmer Meetings. We'll be hearing from Jim Wiesmeyer, a seasoned veteran Washington insider who has a twice weekly voice program on Farm Journal's AgriTalk radio program. Daily updates on FarmJournalPro.com. Going to be talking about election impacts, big issues, and consequences. Jim will be speaking here in just a moment.
Everyone, if you want to take your seats again, we'll go ahead and get started. insights into the dynamic world of agriculture policy and trade. Our esteemed keynote speaker, Jim Wiesmeyer, is a seasoned Washington insider, providing daily updates on ProFarmer's online platform at farmjournalpro.com. With a career spanning since 1978, Jim has interviewed and reported on senior government officials, including Presidents Reagan and Carter and USDA secretaries. A twice-weekly voice on Farm Journal's AgriTalk radio program, Jim is your go-to Washington analyst for ProFarmer. Jim has rejoined ProFarmer after 19 years as their Washington consultant and brings experience and knowledge. Please welcome Jim Wiesmeyer.
Thank you. Thank you. Thank you. You know, this is actually my 50th year, a little bit more, covering the business of agriculture. And I'm a workaholic, and Trump has me exhausted, okay? His first term, I counted him in dog years. I don't know what to count the first month or so, but he's going, it's Trump on steroids, and that's what I'm going to go through. I will leave time for questions, but if you have any at a particular time, just yell them out, okay? We're seeing Trump on steroids. This is the Trump I think he wanted to be his first term. I'll have more on that later. But he seriously believes that he got reelected because of the border security. So initially he has focused on that, and you've seen some of the dramatic results, and I'll have some of his personnel later as well. The U.S. economy and tax cuts is another key, and that embodies energy prices. He knows that he's got to bring down energy prices because energy filters through so many products in the U.S. and the world, and it also deals with the sticky inflation that we've seen. So he's not going to take his eye off that. And as far as tax cuts, again, which I'll have more on, he definitely will stake his presidency on extending those expiring 2017 Trump tax cuts, and he's going to add a few more. I think Congress will eventually, give him that, and that will put the investment psychology into the marketplace. And for agriculture, it just gives investors in agriculture more breathing room to hire more people if they can find them, and to come out with different products. That's all that those tax cuts do. Energy production, I've said all of the above, except with Trump, he doesn't like wind energy. He doesn't like windmills. So I'll expand on that. Trade tariffs and reciprocity, that's big time. I've spent most of my time on two topics, the trade tariffs and the bird flu situation. But trade tariffs, Trump really is setting up his party for either big rewards or big risk, because he has told the American people he's tired of America facing higher tariffs from other countries, and he's going to plow right back into them their same import tariffs that we face. Example he usually gives is the European import tariffs on cars. Every car, the American car that goes into Europe has a 15% tariff on it. We have only a 2.5% tariff. And he's told Europe that's going to change. And Europe is already signaling bow wow on this one. They're saying, okay, we'll come down and equalize. That's really called reciprocity. Now, the fear on tariffs is that some countries, Canada and Mexico, could retaliate once their 25% tariffs supposedly will go into effect next week, March the 4th. And so it could be a trade war, but we'll see. Trump doesn't think that, because he thinks that there'll be compromises throughout. Again, more on tariffs later. Foreign policy moves, you've seen him. He's got Washington, he's flooded the zone. I have never seen, in my 50 years in that town, both Democrats and Republicans, and groups, lobbyists, so befuddled as far as how fast that he has gone. And on the foreign policy, he's very aggressive when it comes to China, Russia, Canada, and Mexico. Doge, we have a new star in town, Elon Musk. I think he's probably going too fast in some of these government rebalancing, but he's got the Washington bureaucrats' attention. Sweeping freeze on federal spending paused by the courts, but increasingly they're going to go up to the Supreme Court level, and I think most of them are probably going to favor Trump because of the power of the executive branch. Can Republicans govern, especially in the House? Because there's only a narrow majority of Republicans in the House, and you have a couple of rebel House Republicans like Tom Massey, Republican from Kentucky, who get up every morning and think, how am I going to vote no on this bill? I mean, they just vote no, you know. But Trump is the real House Speaker, and he'll clash heads with them if he has to. That's what I've seen already. And he knows that he's going to have to get certain legislation called budget reconciliation through to get his agenda through, and we'll discuss that in a little bit. But that's the highlights right there. But I've got a bomb here because it's a blitzkrieg of what's going on in our nation's capital. His favorable rating is the highest it's ever been, actually 53%. The only thing I can tell you that's certain is uncertainty. That's Trump. That's Trump. Greenland. He wants to get at Greenland because of national security reasons. It's called precious minerals through fair thing, and he'll get an agreement with Greenland. Panama Canal. Our new Secretary of State, Marco Rubio, his first trip was to the Panama Canal. And we're going to get China out of the control or their power swings in the operation of the Panama Canal. Canada, Trump has said Canada should be our 51st state. I really don't think that he wants Canada as the 51st state because he'd get 2 more Democratic senators if that was the case, to be very blunt with you, okay? He's getting it to tweak at Justin Trudeau. He actually does not like him. Mexico, you've seen changing the Gulf of Mexico to Gulf of America. That is Trump. Hamas, you would not have seen the hostages returned to the degree they have been had Trump not won the election. Now, Biden did some work on that as well, to be fair. He wants an external revenue service, not just internal, external, to handle all the money he says that's going to be coming in from these tariffs. We'll see. World Health Organization, he took us out, and now he's thinking maybe we'll come back in under better terms for the U.S. This is his 5th year of the presidency, but when you think about it, the 4 years he spent outside of that office, he was working every day, along with more than a few people who he's bringing into his second term, into what he wanted to do. That's why he's been able to go so far so fast. And he learned a lot during his first 4 years. He picked a cabinet that won't write books, negative books about him. Very loyal people. So he's going to be an agent of change. His focus is really on the next 1.5 to 2 years. That's why he's going so fast. Reason? History, just history would suggest that the House of Representatives after the 2026 elections could flip to the Democrats. And it's not 100%. Now, if Trump and the Republicans are successful in getting done what they want to do, then they could keep the House. I think the odds favor them keeping the Senate. But he's going under the assumption, if I lose the House, what can I do before? And that's where he's going through the tax cuts, et cetera. His cabinet, as I said, loyal and very close relationships. And government are people, and I like to go through some of them. Scott Bessent is the Treasury Secretary, very knowledgeable. He's a former hedge fund manager, so if the economy did get in trouble, he'll know what to do. And he's somewhat of a hawk on China, as is Marco Rubio, the Secretary of State, used to be senator from Florida. He was voted in the Senate 99-0 to show you the respect that Marco Rubio has. And he's very much a hawk against China. He wants to make them more honest. The Commerce and U.S. Trade Rep, Howard Lutnick, is the Commerce Secretary. He really wanted the Treasury Secretary, but Trump picked him for Commerce, and he's also going to be over the U.S. Trade Representative's office. Now, Lutnick came from Cantor Fitzgerald. If you know that firm, on 9/11, his company lost 650 people, including his brother. You think he doesn't know national security? And he's going to work closely with Jamison Greer, who was just confirmed last night, actually. 5 Democrats voted for him, along with every Republican, I think, except Rand Paul from Kentucky. Kentucky's just odd sometimes. Jamison Greer is a protege of Bob Lighthizer, who, if you recall, was the USTR under Trump's first administration. And if you want to read a book of how Trump really thinks about trade, read Bob Lighthizer's book that he came out last June, No Free Trade, it's called. And it's almost verbatim how he and Trump sees U.S. trade policy. You would learn a lot. I'm not saying you're going to agree with it all, but that's their strategy. He's only 42 years old. He helped write a portion of the Phase 1 agreement between the U.S. and China that I heard your market outlook presentation. I think it was very well done. I used to be a market beat reporter years ago. You know, I would say if there's a wild card in the corn and soybean market from a trade perspective, it's that they'll announce, Trump will get together with Xi Jinping, his friend, as he says, and they'll announce Phase 2 agreement. And if that's the case, the day that is known, is a known factor, you're going to have a pretty good run-up in corn and soybeans. Remember, I told you that. Jamison Greer, he also wrote portions of the U.S.-Mexico-Canada agreement, and he is a hawk on China as well as Lutnick. So what I just said, his top 4, basically, cabinet people are eyeing China. Interestingly so, when it comes to China, Trump gets along better with Xi Jinping than he does leaders of most other countries, other than Putin. They're best friends forever, okay? The interior, energy, and transportation sector, I don't think I have to tell you the worth of Doug Burgum. He's a smart guy, and Trump likes smart people who's made a lot of money, okay? He knows agriculture, so you don't have to convince him of certain things, of what to do. Trump primarily got him for 2 things. He's going to be he's going to be one of the 2 participants in the Energy Council, so he knows energy, being from North Dakota. And he's also going to speed up the permitting process for energy and biofuel products, because Trump has heard from enough CEOs that it takes 1 year to 2 years to get the yes or no from EPA and other agencies to approve or reject an operation. So that's a good thing. Chris Wright is the energy secretary, and he's an expert on fracking. So he will definitely bring the development back on fracking. You know, in the presidential debate that we went through last year, Kamala Harris, the reporters, who were mostly horrible. I used to be a beat reporter years ago, and I have disdain for the news industry now, most of them. Not Brett Baer of Fox. He's a pretty good traditional reporter, fair and balanced. But if they would have been fair in asking questions to Kamala Harris, on fracking. Remember, she said she no longer wanted to ban fracking? The question should have been, what is fracking? She probably wouldn't have known. And two, would you support fracking? But it wasn't that way. So you're going to have an energy secretary who believes in Trump when he says all of the above, except windmills. Sean Duffy is the transportation secretary. He was baptized early on with that horrible accident of an airplane coming from Kansas with a Black Hawk. And he's done so far so good. He used to be a representative from Wisconsin and on Fox News. National Economic Council and Office Management and Budget. I like to point out the NEC because when Republicans come into the White House, they tend to focus on the National Economic Council. Democrats don't. They have an NEC director, but they don't have the power that one has under a Republican White House. Kevin Hassett frequently was on Fox Business News, is a good friend of Larry Kudlow if you watch Fox Business News, and Kudlow talks to the president almost every day. So I have to watch the Kudlow show, which I like from a business perspective anyway. Kevin Hassett is going to be involved in interagency issues. Now that involves agriculture. The bird flu announcement they made yesterday of $1 billion 5-point plan, he was on top of that as a task force. He worked closely with the new USDA Secretary, Brooke Rollins. So I tell your commodity groups, when they come to town to lobby, make sure they visit Kevin Hassett. And he's going to also be important for renewable fuel standard program issues, refinery exemptions, et cetera. That'll reach his desk. He's a fair person as an economist, believe it or not. Russ Vought, he's Office Management and Budget, and he's been approved in that spot. His claim to initial fame during the first Trump administration, he got Trump to agree that for every new regulation, you get rid of 3 existing ones. Now the ratio is for every new regulation that they bring to Trump, he has to get rid of 10 regulations on the books. I mean, that's, and he'll do it too. He's really, agriculture is a little standoffish on Vought because he originally came from the Heritage Action Group, and they're not so favorably inclined toward farm programs and crop insurance and things like that. So they're going to watch him. And he's been heavily involved in working with these significant cuts that's happening throughout the U.S. Government. But he's a force, and Trump listens to him. The border czar, Tom Homan. If you ever want a guy in your foxhole, this is the guy to get, okay? When he tells Congress the border is secure, unlike the last person in that position, he won't lie, to tell you the truth. And he's already made dramatic gains in those border crossings. Not gains, reductions, okay? I think down 93%. Wasn't that hard, was it? Just follow the law. HHS, Health and Human Services, USDA, and EPA. RFK Jr. Now, he got approved. A lot of people didn't think that he would, but his food angles brought a lot of attention to him, and he's going to challenge a lot of our food programs, the dietary guidelines, etc. Agriculture's nervous about him relative to the ag issues, pesticides, etc. Now, he has told Trump and he's told USDA Secretary Brooke Rollins that he will talk with them before he pushes anything, but he's only one voice. That's what I would tell you. And Trump has already said if he gets too far off the reservation, he'll reel him back in, okay? Brooke Rollins, boy, so far, so good, very good. She is very articulate, and an ag secretary has to be a communicator. They're on the road about 70% of the time. Your deputy secretary is the glue that holds USDA together, usually. In this case, it's Stephen Vaden, and he's been there before. But Brooke Rollins, we interviewed her at our top producer summit last week in Kansas City, and she was very adept at the questions, didn't beat around the bush, actually answered most of the questions. And her background, she had her undergraduate degree at Texas A&M University, and she worked for 3 years at least in Trump administration #1 in the domestic policy council staff. So she's familiar with interagency issues, again, like Kevin Hassett. That's why she knows Kevin Hassett so well. But here's what you need to know about her. She was in the running to be White House Chief of Staff, and she lost to Susan Wiley. So Trump thought so much of her that he almost picked her for White House Chief of Staff. She knows Trump very well. She can get on the phone and get Trump. And that's good because some of the issues that will come up relative to tariffs, biofuels, 45Z program, sustainable aviation fuel, etc. I haven't seen someone as close to the president at USDA since Dick Ling under President Reagan. Dick Ling, as Ag Secretary, was the California Secretary of Agriculture when Reagan was governor. Can you imagine a Republican governor from California? Yes, you younger people, there was a time when there were Republicans. When LA and San Francisco didn't dictate California. You know, it's like Chicago in my original home state of Illinois, okay? But I will tell you, Brooke Rollins so far is a good listener, and that's the secret to me of a cabinet member. Now, she's going to be challenged in these upcoming payments when they're going to be made. I'll have more on that for you, timing, etc. And all these firings at USDA, because she will tell Elon Musk, they don't understand agriculture. They don't understand the direct access that the Farm Service Agency offices have throughout this great country of dealing with you all. And even in the bird flu situation, they fired some scientists that were looking at new modes of dealing with that disease. Now they're trying to hire them back, so they're going too fast in certain areas. Lee Zeldin is the Environmental Protection Agency administrator. He was a former congressman from New York, and as a congressman, he voted against the Renewable Fuel Standard program. And he was asked that question, and he said, that's when I worked for New York. Now I work for the president. And he said the president wants to expand the Renewable Fuel Standard program, especially when it comes to year-round E15. I have learned over the decades, when it comes to EPA, whether it's a Democrat administration or a Republican, I just don't trust them, okay? They'll say one thing and do another, but they haven't had a Trump like we're seeing him right now. So we're going to see if he executes. The concern, again, is some of the inputs that we have in agriculture, both at the RFK Jr. level and at EPA. You need your products to produce your crop. More on issues later. Now, I already told you the main focus for Trump initially has been the border, and he won't let that go. He's already telling Mexico and Canada, he said it today again, that they're not doing enough to stop the fentanyl coming across the Canadian and Mexico borders. Now, their prime minister and president in the case of Mexico, Shinbine, is saying that they've dramatically increased personnel at the border, put drones in the operation, etc., but Trump is saying not enough. I guess they're going to cite facts and figures on that. And I mentioned the economy. The Federal Reserve, interest rates. About mid-year last year, the market was thinking 3 or 4 interest rate cuts this calendar year. Now they're down to 1, and maybe not even that. It's called sticky inflation. It's called very high egg prices, okay? And now egg prices are now what the Democrats in Congress are saying every day. They didn't say it when Biden was president, but now they're telling Trump, what are you doing about egg prices? So that's why you had that announcement yesterday, from a political standpoint as well, that they have to try to deal with getting the volume of eggs back out there. And Brooke Rollins and Kevin Hassett believe that the Biden administration depopulated way too many birds than they should have. They should have taken a more targeted approach. Then you would have had more layers. You would have had more eggs. That's going to be put to the task. Okay, issues. Border security and labor issues. Wherever I go, CEO of agribusiness companies say labor issues, how to find labor and how to keep them, is one of their biggest issues and concerns. So you're going to have a push. House Ag Committee Chairman G.T. Thompson, Republican from Pennsylvania, said yesterday that he wants to push a bill that would significantly increase H2A participants. And in the other areas, we'll see on that one. Debt ceiling, $36 trillion. Now all of a sudden some Republican lawmakers are concerned about the debt situation. The cost to service our debt right now is more, a little bit more than what we spend on defense right now. So something is going to have to give. We can't grow our way out of the problem anymore. That's why the push in the next few years is going to be on reducing spending. And both political parties do not like to cut spending. And that could get into the Farm Bill debate this year and in the future. Tax cuts, you need tax cuts. They will be approved. If they don't, then the Republicans will lose both the House and Senate in 2026. Trump wants them early this year because he knows that it takes time to build into the marketplace. So he wants them April or May of this year. We'll see. Tariffs and energy, more later. Regulations, I've already said, one of the hallmarks of Trump 1.0 was this deregulation, and that will continue. From an investor standpoint, I said during the first Trump administration, I was in Springfield, Illinois, the day after the 2016 elections. And I told the audience when I first got up there, I said, you know, I'm feeling a little under the weather because I partied too much the night before because people told me if Trump was going to be elected, the world was going to come to an end. So I just partied, okay? Well, bank stocks usually take off under a Republican administration because of deregulation. That'll probably happen again. Because regulation, you need some of them, of course. But many regulations are unfunded mandates. They're taxes. When you look at them, they're taxes. And I never could understand why mostly Democrat administration were top heavy when it came to regulations when they hurt the small to medium-sized companies the most. The big companies don't like them, but they have more the wherewithal to deal with them from a financial responsibility. So that's that issue in a nutshell. Senate. We have relatively large gains in the Senate. The Republicans control it 53 to 47. It was 51-49 last Congress by the Democrats. New majority leader is John Thune from South Dakota. Again, I don't think I have to tell North Dakota people. He knows agriculture. One of the most popular Republicans in Congress, and he has one of the best staffs. They listen well, and I think he'll be good for the business of agriculture. The big Republican gains are going to temper the impact of moderate Republicans. Trump calls them rhinos, Republicans in name only. Senators Lisa Murkowski from Alaska, Susan Collins from Maine, John Curtis from Utah, Todd Young from Indiana, and Bill Cassidy from Louisiana. The wild cards are Senators Rand Paul and Mitch McConnell. Look at both from Kentucky. You know, Tom Massey on the House side and two. Now, Mitch McConnell used to be the majority leader, but he and Trump do not get along, and that's an understatement. He's not going to run for re-election in 2026 because he would have been primaried and not gotten it. The House. After the election, the Republicans won 220 and the Democrats 215, but now it's only 218 to 215 because Trump picked 3 House Republicans to be in his cabinet, and a number of them won't be replaced until April. That's why you're not going to have another big vote until April. And most of these, almost all of them, are from Republican-safe districts. But look at the spread. The House Speaker is Mike Johnson, Republican from Louisiana. He's a religious man, and he has to be to corral that force. The House is so hard, it's just not like herding cats. It's like herding feral cats. I mean, that's what a job that he has. It's hard. It's hard. Trump is really the House Speaker. But now it takes 9 members of the same ruling party to oust the Speaker. That was a change from the last Congress, and it's a good one. Election wave, we had it, where the Republicans won the White House, House, and Senate. What's that mean? Well, you can have big impacts legislatively. That's how Trump got his initial 2017 tax cuts, and it's how Biden got his Inflation Reduction Act, which was really a climate bill as we know it. Now, we call it budget reconciliation. You have to have a budget resolution before, and that's what the House narrowly passed earlier this week. The Senate's already passed theirs. Now they're going to have to do the differences between the 2 chambers, but that's where they're going to put the tax cut in there. But this is what Congress has to do. They're going to try to complete the fiscal year 25 appropriations. That started last October 1. The current stopgap spending bill goes only until March 14th. And there's already a countdown to shutdown again. Just here we go again. But you know, your $10 billion in economic aid that's coming out, by the way, if it's not out by that date, those could be affected with any government shutdown. They'll just have to wait. They're going to have to do fiscal year 26 appropriations. That starts October 1. They're going to try to do, well, they did, the budget resolution that requires reconciliation. Debt ceiling increase, I've already talked about. They have to address the California disaster. That's going to cost at least $100 billion. Yeah. A new farm bill or more ad hoc aid. This is what G.T. Thompson said. If you don't have a new farm bill this year, much like last year on December 21st when Congress passed a $10 billion economic aid package, he said, well, we're going to have to ask the same thing. More on the farm bill later. The reconciliation is going to include taxes, energy, border, and possibly a new farm bill. And here's what you may not have read or heard about. You can get a farm bill done, not on its own, but they could roll that into this budget reconciliation measure, which doesn't need one Democratic vote. If the Republicans can agree amongst themselves, okay? The Senate, they can. The House is a question mark. Now, that's the only way I think you'll probably get a farm bill this year. So here we have showdown. Defense hawks, they want to increase the defense budget. The fiscal hawks, they want to cut spending, and they're worried about the deficits. The White House wants to extend the debt ceiling for at least 4 years. The anti-Doge Democrats, they're upset. They want no spending deal that Musk can just ignore. So they want a commitment that what they say they're going to spend will be spent. They're not going to get that. Border hawks, they're going to fund deportation, and they will. Progressives, they want to protect the safety net. That's your AOC types in the House, the woke people, as I call them. I mentioned we have a new star, Elon Musk. He helped Trump and the Republicans in campaign funding to the tune of $260 million. And he's already said he's going to keep his political action committee. And again, it's been a fresh air to a degree that they're looking at all of the prior spending that was done over the last few years. A lot of it was unnecessary. I'm not going to say fraud, because fraud has to be proven in courts, but waste, definitely, definitely. I mean, look at all the billions of dollars that's been spent on fast internet. This is the initial reason why Musk, who used to favor Biden, by the way, but he went to President Biden and said, I've got a Starlink satellite system that will that you won't need all this expensive fiber optics, and it'll be good for rural countryside. Biden didn't take him up. They just spent billions and billions of dollars on fiber optics. Now, from what I can gather in my past reporting, North Dakota has one of the best internet systems for the rural countryside, because years ago your legislature, not Washington, did it the right way. They kept the biggies out of the game, and your prices went lower, and that speeded up the process of the internet. But as far as Elon Musk and his minions, as the Democrats call them, the young whiz kids, they're very smart. Musk can look at a spreadsheet and find out something's wrong. He's that smart. You know, it's like an accountant. If you're from a company, an accountant, a good accountant, they're really overhead. Tell them I said that. They don't do anything. They just say no, you know. But they know numbers. And he can look at that and he'll say, something's wrong here. And he's looking into it. Now, wouldn't you think Congress, both political parties, should have done that for the last decade or so? It's called oversight hearings. They haven't done it. They haven't done it. So in this way, it's good. I remember President Carter, a moderate Democrat, when he first came to town, he wanted zero-based budgeting, where every department had to start from scratch, $1, and justify their spending. The Democrats in his party at the time, no way. They fought him, and it never occurred. Just perspective for you. Trump, he has big support of farmers, and I got this quote from a key insider. Trump knows that around 65% of the rural voters voted for him. That's even more than they voted for him in 2016 and 2020. Here was the quote: when congressional Republicans cut a deal late last year with the Democrats on the end-of-year spending package that included the farm aid, Musk and Vivek Ramaswamy attacked the whole package. Trump intervened quickly to say he was all for the agriculture provisions, just not for all the stuff that the Democrats wanted. That was decisive in overturning his own people. And it says a lot about how important he feels farmers are. So we'll see if he continues that. I think he will. If we do have another trade war with China, if they don't work that other phase 2 agreement like I think they will, or may, then some income transfer payments are going to happen again. So ag sector concerns, labor, I've already talked about it. Tariffs, I'm going to talk a lot more. The fear is retaliation. The Make America Healthy Again, if confirmed, well, he was. RFK Jr., again, he's going to give RFK Jr. a leash for a time, but it'll reel him back in if he has to. Farm income. When you look at farm income is not farmer income, because you have to split it, and I'll tell you why. Direct government payments are forecast to surge a little over $33 billion. That's 354%, to a little over $42 billion this calendar year. Why is that? That's the $10 billion in economic aid and the $21 billion in ag disaster aid that we saw approved by Congress. December the 21st last year. And the horrible internet, I don't get on the internet, I just don't have time to read all that crap. That you'll see some people say, oh, well, they have their doubts that this is even going to be made. They're wrong. Bet them, and I'll backstop you. Those payments will be made, okay? It's a tale of two farm economies. Look at cattle. Any cattle producers in the audience? Okay, I want a Christmas gift from you, okay? You can afford it, okay? Poultry. Look at dairy. First time in years, dairy people are, gimme. They're not saying it. But look at corn, down 45%. Soybeans, down 45%. In inflation-adjusted net cash income, 22 to 25. That's why you had those $10 billion economic aid payments. Look at this ad hoc aid lifting the farm economy this calendar year, with and without those assistance payments. This is what it would be. This is from Terrain. So income transfers are important, okay? Crop insurance, it's the best risk management tool I've ever seen in my whole career. But when you have very low prices, that's when you need Title I of the Farm Bill. That's when you need an effective reference price that we don't have, and that's the Farm Bill battle. The $10 billion, about 40% is going to corn producers, about 26% to soybeans, and 16% wheat. You have to be a program crop to be eligible. So you sugar beet producers, this is why you don't get it. You're not a program crop, so to speak, okay? When are you going to get them? USDA has signed off on the package, and it's now with the tech people to implement it. And I've been told 85% of the initial payment will be made, and a supplemental payment will be made sometime in the summertime. And they'll probably announce that very, very soon. I'm not quite sure when the disaster payments are going to be made. I just emailed somebody and I didn't get a definitive answer. Tight margins in those relief payments. Corn's going to get $43 an acre. You know, there's a factor in it. Soybeans, $29 an acre. And look at cotton, $87 an acre. Smaller number of acres out there. But that program's going to help cash flow purposes. Agricultural trade. It used to be ag trade was the shining star that we had a surplus for years. For 3 consecutive years, we've had an ag trade deficit. This calendar year, USDA projects $45.5 billion trade deficit. Now, when Tom Vilsack was USDA secretary last year, he said, the reason is a strong dollar. In a way, he's right there, but it's not the total reason. And he said all the horticultural products that we get, the fruits and vegetables, and from Mexico and Latin American countries. I was in Sacramento, California recently, and I asked an almond producer, they call them almonds in California, almonds to most other people. They're different in California. And I asked an almond producer there, was Secretary Vilsack right? He said, well, to a degree he is. However, when it comes to California, it's the price of our energy and it's our regulations that we have in the state that's dragging us down to be uncompetitive. And I think that filled that answer out for me. Those regulations can be a killer. So Trump is trying the new direction for trade policy. It's big. The days of trade promotion authority and new trade deals of the old nature are probably dormant, if not dead. One veteran trade official told me. There has to be a new approach to expanding markets, and Trump may just be the guy to make it happen. He's a good salesman. Look at these, and I'm not going to go through all these, but these are all the Trump tariff threats and actions. He's got 25% on steel and aluminum. They take effect March 12th, March the 4th, and they've already been delayed to Canada and Mexico. So we could see some fireworks next week unless at the last minute again, They either have a further extension to early April for some of these Trump mandated trade policy reports to come out, or whether or not they have an actual agreement with Canada and Mexico. But trade policy is not going to go away anytime soon. So free trade, regretful, I hope I'm wrong on all these, but I don't think I am. Free trade has lost the day. We have a $918 billion trade deficit last year, huge deficits for China, Mexico, and Canada. I mentioned the $45.5 billion ag trade deficit. Why is this? Here's the real reasons. Countries have manipulated their currencies relative to the dollar. Big trade barriers on U.S. products. China has stolen our intellectual property. And other countries have far few labor and environmental regulations than you all have to deal with. That's really the reason why we're having trade problems. So economically and politically, free trade argument doesn't hold any longer. Democrats and Republicans agree that we have to do something different on trade. Help for ag exports, not all negative. A new farm bill, whenever we get it, has doubling of a funding boost for the market access program and FMD. Those are market research for agricultural trade, and they're good programs. Biden's group came up with a regional ag promotion program that's been successful. It will continue, but it's politics. They'll just rename the program. That's called politics. Food aid. You've already seen the dramatic shift in Trump on food aid. He just thinks we've been suckers on food aid. Now, I was at a rice meeting about a month ago in Memphis, rice and cotton meeting, and I listened. And rice producers told me, you know, out of all the food aid that goes out from the U.S., only a little over 30% is actual commodities. The rest is cash. So you think Trump likes that? No. He'll think that cash is going to certain people in a government and not being utilized right. So watch changes in food aid program, Food for Peace, etc. Tariffs. I mentioned the trade review reports coming out in early April. They will be key because in agriculture, what we're going to focus on is where do they pledge a income transfer payment if we're into a trade war with China and things like that. China is going to be tit for tat. The additional 10% tariffs, additional, what we already put on them, is going to take effect next week as well. We're going to have to see China's initial response to that. It could be negative in the short term. I've already mentioned Canada and Mexico. The EU, as only Trump can do. Now, this is our president. They don't usually speak like that, but Trump's different. His quote yesterday was, the EU was formed to screw the United States. That's word for word. Just, he's different. He's just different, you know. And he goes, he is really directing. He does not like the way Europe has been run, okay? He calls them socialist, and he's going to get after them. Reciprocal trade policy, I've already said. He's going to try it out. This is the grand experiment. I hope it works. And steel and aluminum tariffs, Biden continued those tariffs that Trump first set in his first term. And now Trump is just adding to them. But that affects machinery prices in the U.S. Look at our top 10 trading partners in 2024. Mexico, China, and Canada accounted for a little over 40% of total U.S. Imports from those countries. Look at that. That's why Mexico, China, and Canada policy is so important. New Farm Bill. Well, we have one this year. You have three options. Put most, if not all, the new Farm Bill in the budget reconciliation that I talked about, but will the House and Senate Republican leadership agree? Will they want to put another sensitive issue on that budget reconciliation measure? Will the Republican House and Senate Ag Committee leaders demand that a Farm Bill be included to get their votes? Now that's an interesting one because last year, remember when I told you I like to connect dots? Remember when I told you that Trump came to rescue that $10 billion in economic aid and $21 billion in ag disaster aid? Another reason that occurred, G.T. Thompson, House Ag Committee Chairman, and John Bozeman, who's now the new Senate Ag Committee Chairman, went to their leadership and said, we're not going to vote for this bill. And it's going to go down to defeat if it doesn't include the agriculture provisions. They could do the same thing on budget reconciliation. We'll see. You could have a standalone farm bill. It could possibly pass the Senate, but the fate is unclear in the House, because you could have 60 House Republicans that will vote against that bill. So you need Democrats. But the Democrats are all upset of what the Republicans may do under the food stamp program. About 85% of all the funding in the farm bill is food stamps. So if you change the requirements, if you put additional worker requirements, if you change the thrifty food program that Vilsack under the Biden administration spent billions of dollars in additional funding for, they won't vote for a farm bill. So if the 2018 farm bill has to be extended again, G.T. Thompson has already said we'll become right back at the end of this calendar year and ask for more economic aid. But will a more budget-conscious Congress approve it? That's a question mark. So, bottom line, ag disaster and financial aid is here. Farm bill, I've gone through the issues. We have new leaders. We no longer have last year, Senate Ag Committee Chairman Debbie Stabenow, Democrat from Michigan. She's the real reason why you didn't have a farm bill last year. She didn't want to give. She didn't want to give on conservation, and she didn't want to give on specialty crops. Now that we have John Bozeman and a new ranking member on the Senate Ag Committee, Amy Klobuchar, Democrat from Minnesota, she's a pretty good person. She's more willing to work with Republicans, at least her history says that. Crop insurance, where we at? I've got one slide later on that one, but it's the best risk management tool I've ever seen. You all probably know, that's why you're here. I applaud the insurance agency here for this educational program. That's a give back to you, so I applaud them for that. You never stop learning. I never stop learning. That's what my parents taught me. But my fear is that crop insurance is so successful, Washington hates success. They go after low-hanging fruit, and they'll say, look at that subsidy to buy up for higher levels for crop insurance. Well, we only want to cut 1 to 3%, just 1 to 3. That's the camel under the tent, because that'll then be an ATM machine for them in the future if they ever need more money. That's how Congress works. So that's what you have to be concerned about. They ought to want more farmers, expand the universe, expand the buy-up insurance. That's called more protection. Fundamental change is happening in this administration versus the Biden when it comes to ag policy. The Biden administration focused on equity issues, the underserved. Not that they shouldn't have had certain programs, but not to the degree that many people thought they should have. Trump is going to focus on, and Brooke Rollins has already said they're going to focus on those farmers who produce 85% of the production in the meats. And that's the old way, and that's the right way. Regulations, Chevron deference, the Supreme Court ruled that Congress could no longer rely on the Energy Department, EPA, and USDA to determine what the law means, that they have to be more specific, and they're going to have to work harder. Packers and Stockyards Act, the Biden administration, USDA, was really focusing on that. Trump administration is going to pull back. EPA, I've already talked about that. Antitrust and competition, I don't see much change between Trump and Biden. On this one, energy issues, 45Z program, that's sustainable aviation fuel. Now, in the waning days of the Biden administration, they came out with guidance on how to implement that program, but the Trump administration is going to have to solidify those rules. Now, for your soybean producers, and the great number of new processing plants over the last 2 to 2.5 years, dramatic increase, and it shows you the worth of having a processing, either an ethanol plant for corn or soybean oil or a crushing facility near you. It's called tighter basis, right? Either better cash flat price or tighter basis. So you want to see those plants come up there, but you also want them to be profitable. Now there's a little funk in the soybean oil industry going on because we have the blender's tax credit that's no longer, that's being replaced by 45Z. They used to get $1 for that program. And now under Sustainable Aviation Fuel 45Z, it looks like it'll be 30 cents. So the margin there in the crushing is not going to be nearly as wide. There's complications also in the 45Z. It has to be third-party verified. They're going to have it cut. So farmers increasingly are beginning to ask, how's it going to positively affect me? See, this is a producer credit. So the verdict is still out on that. Renewable Fuel Standard Program and E15. This year, USDA, the EPA has to announce the mandated levels for corn and biodiesel. No later than December of this year. It should have been earlier. By law, it's supposed to be 14 months prior, but Biden already extended the time frame when he was in. And due to this changes going on in the Trump administration, it may take until June to get the initial mandate for 2026. They better be friendly for corn-based ethanol, and we'll see if they live up to the potential mandate volume for renewable diesel and biodiesel. They haven't over the past few times. E15 year-round. Last year in that bill that I told you that included economic aid and disaster aid, the initial bill had year-round E15. That was pulled back and it wasn't put back in. And right now, EPA a week or so ago announced that there will be summertime E15 for 8 states, but they're going to consider requests from states like Ohio already and Kansas earlier this week asked for a waiver for this year because for implementation to deal with E15. They've had years to implement E15. It's called an excuse, okay? It's called an excuse. Solar panels, I don't see many in this state, but I'll tell you, wherever I go in this great country, I'm seeing the increase in solar panels. Primarily as a result of those subsidies under the Inflation Reduction Act, so will they stay? But these are 20, 25-year contracts. I'm originally from Illinois, Southern Illinois, and in Northern Illinois, this is not average, but they're paying up to $4,000 an acre for these contracts. Usually they're in from $1,500 to $2,500 an acre. I've gone to the Black Lands of North Carolina, Missouri. When I drive, I go down to the Ozarks a lot. So I fly into St. Louis, drive I-70, then go south. But I've seen the development of new within the last year. Big numbers of solar panels, and some of this is on productive soil. Now, I can talk both ends of the issue. A landowner has rights, but it's not an easy one. And families, some families want to put them in, other families don't. It's affected the rural economy because you don't turn over the money as rapidly under solar farms. Pipelines, again, issue here, South Dakota, Iowa. I did, a year or so ago, I did 6 meetings for the Iowa Soybean Association throughout the great state of Iowa, and I learned how to answer that question about pipelines very carefully. I'd ask the farmer, is a pipeline going to go through your operation? And if it was, he was against them. The reason, he wasn't being adequately compensated in his judgment. And when you look at yield maps, remote sensing, it has yield degradation. So these companies are going to have to pay up in order to do it. On the other side of the pipeline question, we need them to transport, whether it's petroleum or biofuels. So I escaped that issue now, okay? Crop insurance, bipartisan support in Congress. Thompson and Bozeman both have bills. Both of their farm bills had good provisions for more buy-up and more incentives, especially in the specialty crop areas. Cattle, dramatic increase in cattle and dairy insurance policies because there's no longer a cap put on what you can get. Rollins can protect and preserve and strengthen crop insurance at USDA, including addressing A&O, administrative and operating problems that harm the whole industry. It's the flaw that harms specialty crops, the lack of an inflation adjustment, and this is going to be included if we ever get a farm bill. So that helps your actual agents, that execute for you. I would tell the industry to keep improving products for farmers and making them more accessible, be innovative with farmers and ranchers' needs. And the crop insurance industry has, since 2000, when the ARPA Act, that's when the private industry really got involved with the government. And this tells me why I always want the crop insurance industry to be a joint venture. I don't want it to go 100% government, God forbid. We wouldn't have the innovation that we've had since the year 2000. That's the best use of government policy, is when you have a joint relationships with the private industry and government. Farm bill process will not be easy, as I've said. Warning, agriculture, you better be prepared for attacks. That budget resolution debate and the budget reconciliation debate is one opportunity for opponents to attack key lawmaker supports in both chambers. Now, you sugar beet producers, I remember when Reagan was president, that's when they did away with the sugar program for a while. Republican. So you have to, I'm not predicting that at all. You got bipartisan support for sugar. And in fact, your Senator Hoeven is an unsung hero for crop insurance, and he's over appropriations for ag. So he'll protect both of those industries. Also in sugar, here's reciprocity. Right now with ethanol, this is called a conundrum, by the way, a word for conundrum. Brazil, the US is saying, okay, Brazil, we take your ethanol in and charge you a tariff of 2.5%. But US ethanol going into Brazil, 18% tariffs. What are you going to do about it? So Brazilian officials shot back. Ethanol and sugar go together here. We need better access to the US sugar market. But yet when you look at the facts and figures, last year they were the leading exporter of sugar into the United States. That's called crocodile tears, okay? But that's how your commodities can be used against each other in a policy debate. I think that's it. I covered a lot of ground. I wanted Washington to come alive for you because you probably think it's dead in many cases. I've frequently have been asked, will Washington ever change? Will it become more civil? And I think yes, sometime. And I remember asking that question to the smartest guy I ever knew in agriculture, other than Willard Sparks in the private industry, was Clayton Ihry, a former USDA secretary, former U.S. trade representative. He used to head up the Mercantile Exchange. He's no longer with us. And I asked him that question. He said, Jim, it'll become more civil when we have a true minority party, when they can't come back into power the next election. That's when they have to get along with each other to get anything done. And he's probably right. But I've just told you, we're too close in both the House and Senate. But one way or the other, either a political party is going to screw up so bad, that it'll get us into that spread pattern that Clayton talked about, or they'll be so successful that that spread will occur. And I think we're at that juncture right now of it could happen either way. Again, what's wrong with our nation's capital? My father was one of 13. That's how they dealt with farm labor when he was growing up, okay? And he was a good Catholic, and he had 6 kids right away. And one time he put us around a round table just like this, and he filled a glass half full. And he asked us to talk about it. And we said different things. And a number of us asked him, why didn't you fill up that glass? And he looked at it, and he said, you know, a glass half full is very good news, because I remember when it was empty. He came through the Depression. And that's what's wrong with our nation's capital, both political parties. If they don't get everything they want, they vote no. That has to change in order to deal with some of these hefty issues on the debt and policy issues that I just talked about. Okay? Now that's my formal presentation. I'm still bullish for agriculture because it's protein. If you raise anything protein, the rise of the rest around the world, the first thing they do when their economy improves is to import more food products, protein, corn, soybeans, meat, pork, cattle, beef, and all that. So I'm still a firm believer in that. So you're in a growth industry. That doesn't mean every year you're going to have a good year. That's why you have the Title I program, okay? I'll end it with a funny story, and then I'll ask for your questions to tell you how true stories can make weight. I was in Stowe, Vermont. That's where the Ben & Jerry's, if you have ever been at Stowe, Vermont, that's the ice cream maker. You know, I didn't get this way for nothing, you know. And I went to a foo-foo bar there. I sat down, and I ordered a pork tenderloin. And this lady to the right of me, she said, well, why didn't you order the free-range chicken? And I turned to her, and I said, do you know what a free-range chicken eats? She said, no. I said, well, it follows the other chickens and eats their excrement. And she turned to the bartender and said, I'll have a pork tenderloin. That's how you sell your story, okay? Any questions on issues I talked about or I didn't address that you want me to comment on? And we have a roving mic for those. Yeah?
You referenced the budget, looming budget showdown coming. Gut instinct, is there going to be a shutdown? It could be a long one.
You know, I've been through so many of them. All great men are dead, and I'm not well myself, okay? There's been 19 farm bills, and I will have covered 11 of them, okay? That's just perspective. It could go down to the last hours again. Now, the Democrats are insisting right now that they want a commitment that Musk will not will spend the money that Congress appropriated, okay? Where the Trump people vote at all want to go back to the Nixon days, by the way, of impoundment. They want to say, no, this is not necessary funding. We have an executive privilege, and it's eventually going to be challenged at the Supreme Court. If they don't get that commitment, you need Democrat votes, especially in the House, for that budget. Will they get it? And if not, will a fail-safe program be, okay, we're not getting that, but we'll just have another stopgap spending measure. They'll just kick the can down the road again. I rarely do I say I don't know, okay? But on this one, I've got to see the atmosphere in the last 2 days. In the last 2 days of it. It'd be silly if they shut down the government. The defense hates it because then they don't, if it's a year-long extension or the remainder of the year, you have much less defense spending. So the Pentagon does not like a stopgap spending measure. Those are the issues. But now you have the Democrats upset that they're seeing some of their previous spending not being executed or being clawed back. And the concern about the soybean people have, soybean oil people have, is will, in this budget reconciliation, to get more money to fund the Trump tax cuts, will they claw back some of those biofuel tax incentives? You know, and if I can't rule that out. I don't think it's likely because farm state lawmakers like your Hoven and Chuck Grassley, Republican from Iowa, definitely like the 45Z program. But those are issues. They're hard issues. That's hard to tell you. I can change every day, okay, on that issue. For you, if you want my morning report, I'll give it to you for the best price through the courtesy of this insurance company that a farmer loves. 0. Okay? That's my payback. That all the good stuff that agriculture has given me in my lifetime. And I go through some of these policy issues every day, okay? And it's usually out in early, well, I should get it out in the early morning, okay? Just email me, my last name @gmail.com, and I'll put your email on my free distribution list, okay? Any other questions? That was a good one.
I got another one. Why does no one really actually care about the deficit and the debt anymore? I mean, you referenced Thomas Massey. He wears the debt clock on his lapel. It's not a sexy issue, but it's a problem.
It is a problem. And that's one area where Thomas Massey is correct, by the way. For years, it used to be Republicans worried about it all the time. And Trump is not a typical Republican. He's a more libertarian populist. And his secret, I think, was getting those voters in 2016 who thought neither political party were talking to them. And I think he built on that. Now he's getting into Democratic constituencies, the Black American young voter and the Hispanic community who saw the border issues. The debt issue is a huge one. Now, as a farmer market reporter, I will tell you, the only boss Washington has is the bond market. If the bond market ever realizes or thinks that the White House and legislative branch has lost control of dealing with our debt, your bond prices are going to go bonkers. And that means real interest rates are going to go higher faster than anyone realizes. Not going to happen overnight, not going to happen this year, but in the foreseeable future, it could. That's how serious that topic is. And that's why Doge, the Elon Musk, is saying, we can't continue this. The Federal Reserve, Jerome J. Powell, is saying we're on an unsustainable path. All the signals are there. Our debt as a percent of our economy, GDP, gross domestic product, which equals economy, is at a higher level than it was after World War II. So all the signals are there, but we're not heeding them. But now Doge and Trump is saying, to a degree, spending. And I've just said, both political parties, they don't like to cut spending. That means they have to, it's not good to be on Appropriations Committee during those years. You know, where do you think a farm bill will be if you have to spend over $1 trillion a year just to service your debt? Just where the next farm bill going to be? So these are important, heady stuffs. So usually leaders lead in these times in our great history. So we'll see both political parties if they step up to it. That's why you need a good Treasury Secretary, Bassett, who knows what can happen. That's why you have to look at the Federal Reserve to see what they will do under that situation. But it could be very, very important. Now, my 401k would go down, but I'll just call up my favorite, I'm his godfather, my nephew, and I just tell him, you're just going to get less money. That's my hedge. But that's me at my age. But for you younger people, watch it. It's an important issue. Yeah. Any other ones? If you have individual questions, you have my email, Every other letter's an E except at the beginning, WIESEMEYER. That's how I learned it as a kid, at gmail.com. So it's really easy. It's really easy, okay? I'll leave you with one final story. I shouldn't go to the Ozarks because 3 years ago I went to the Ozarks, and my nephew he's done quite well as an engineer. And he has a nice place on the Ozarks, and he had a boat. And when I was getting off of it, his brother, my other nephew, didn't realize how svelte I was, and that I was a lot heavier than he thought, and I fell down. Well, several months later, I was in a speech in Omaha. I felt something pull in my left leg, and long story short, it was a complex tear of the meniscus. So I went to my doctor, and we have a great relationship. He tells me doctor jokes, and I tell him Washington jokes. So we laugh, and the nurses outside wonder, what in the hell's going on? You know, one time when I lost 40 pounds, he gave me a present. He goes, what do you want, Viagra? So that's the kind of doctor he is. So then, last August, I was back at my nephew's place, and I was in a hot tub. I forget how old I am. And I didn't wait for him to help me out. And I had been going to a gym. I'm still going to a gym. I have to now. And I had more power in my right leg sitting down and getting off when I was sitting down. Again, long story short, I went down like that, hit the top of my head. I could have been paralyzed, and it was horrible. And I didn't go to the doctor because my nephew's wife is a nurse, and she's putting me through protocols on a concussion and all that. Again, next day I went to my doctor, and he said, okay, now let's go through this. When you got your meniscus, you said you could turn anything a negative into a positive. And remember what you said on the meniscus? I said, yeah. I said, at least I wasn't a horse. They would have killed me. So you can turn any negative into a positive. So then he goes, okay, now I got you. How do you turn your neck? I mean, my neck is about 65% back, okay? I'm a therapist twice a week, etc. How do you turn that into a positive? I said, Doc, I can't. He goes, then I got you. I said, no. I said, because I can't answer a question means I can run for the President of the United States, I just couldn't win. Thank you for your time.
Love for you to bring your production records in when you come and meet with us, and we can kill two birds with one stone. So, Mike, did you have anything else that you wanted to add?
No, let's get those appointments. We've got some thoughts. A lot of them were covered here between Rich and all that on where we should go. Rich is really right on the stacking, and we want to get some ideas on the site that we have to say. Everybody's wondering about the ARC PLC. Did I see the other day they extended that for a month?
Yeah. They did. So April 15th.
So we actually got a little more time, but I think we got a pretty good handle on where we're going to go. It ties into the cross insurance this year.
With that, then, we would like to thank both Rich and Jim for being here. We also have a number of folks from Advanced Ag Protection, and we have NAU and Farmers Mutual Hail, and thank you to all of you for being here today as well, and to all of you for joining us. Let us know if you have any questions. Final, Teresa has a table full of goodies, and I don't think she wants to bring any of them back to the office. So, but we have a couple of door prizes. So first, we will draw for. I think somebody else.
And again, as they draw the door prizes. Great presentations there on your live event for today. Again, that will conclude our meeting coverage today from Hillsboro. Again, if you want to attend one in-person live, you can do so in Hope this afternoon at 3:30. You can also go back and watch our the full presentations with Rich Morrison and Jim Wiesmeyer at the conclusion of this on yourliveevent.com. But again, thanks to the Ihry Insurance team again for having us here. They covered all home, auto, crop, commercial, and benefits insurance. Go to IhryINS.com for a free quote today, especially for your farm operation with that crop insurance deadline coming up in March. From all of us here at YourLiveEvent.com, as James Martins, don't forget to check in with us later on today. Region 1, Division A audio-only coverage starts this afternoon with the third place and championship game. And then as well, we got the third place and championship game from Region 2, Division A, full video and audio from Mayville State later on this evening. First, third place game is at 5:30, and the championship starts at 7 tonight for Region 2. And from all of us here at YourLiveEvent.com, James Martin saying thank you to all of our farmers and growers out there, and we hope you have a great start to your planting season.